All right, this is exercise 10-32 in your cost book, page 392. And this one starts to get a little bit involved. So we've got what they're going to ask us to do is prepare a schedule showing the budgeted merchandise purchases for May and June. That's going to be pretty straightforward. Prepare a schedule showing the budgeted cash disbursements for June. Prepare a schedule showing the budgeted cash collections during May, and determine the gross and net balances of accounts receivable in May on May 31. All right, so the first thing we're going to do is prepare budgeted merchandise purchases for May and June. And if we read the narrative up there under purchases and expenses, we find out that each month's units of ending inventory should equal 130% of next month's cost of sales. Okay, so what that means is that we should have enough merchandise to sell that plus 30% more at the end of the period. Okay, so we assume so if we're going to make this for May and June, we assume that in April, we are going to sell 12,100 units. So that means that at the end of March, we had 12,100 plus 30% more. So if we do the math on that, we should have 15,730 at the beginning of April. Okay, and then we are going to use 12,100. So we end up with a tentative balance here of 3,630 units. And that will be the end of April. And so in May, we're going to need 11,900. And 30% more. So we need 15,470. So if we subtract that difference, we will get our purchases. For May, or for April. All right. So we need to purchase 11,840. All right. So that would be our purchases for the month of April. And then May, so we're going to have that beginning balance. So May comes along and we'll have the beginning inventory, which will just be the ending inventory here, 15,470. We are going to use in May 11,900. That would give us a tentative balance of 3,570. Now we're going to need an ending inventory in May of 11,400 plus 30%. That'll be 14,820. And once again, if we subtract that, we get a purchases amount of $11,250. Now this is in units right now. Then we go ahead and go to June. And so we're going to have our beginning inventory is May's ending of 14,820. We are going to use in June 11,400. That will give us a tentative balance of 3,420, right? We need an ending balance in June of 12,000 for July, plus 30% would be 15,600. If we subtract off the remaining inventory, we end up with purchases of 12,180. All right. Now, it also tells us in the narrative up there that each unit of inventory costs $20. So we'll multiply both of those times 20. So 243,600 will be the amount that we purchase in June. And in May, will be 225,000 even. All right, so that takes care of part one of our problem. Part two then shows budgeted cash disbursements during June. Okay, so budgeted cash disbursements during June. It says purchases and expenses. All purchases and expenses are on open account. The firm pays its payables over a 2-month period with 54% in the month of purchase. Each month's unit ending inventory is equal to 30%. The cost of each unit is $20. General administrative expenses, of which 2,000 depreciation equals 15% of the current month's sales. All right. So our sales are shown. So we want cash disbursements for June. So we will pay part of May's expenses in June and part of June's expenses in June. And so we have our May. So for the June amount, May's purchases is going to be 225 times 44%. And that will be 99,000. And June's purchases will be 243,600 times 56%. And that's 136,416. And then we need the selling and administrative expenses. General selling and administrative expenses is 15% of sales. And so May's sales is $357,000 times 0.15 is going to be 53,550. Remember though that 2,000 is depreciation. Depreciation is a non-cash expense. So that will be 51,550. And we're going to pay 44% of that in June. And that will be, so May's general selling and administrative is going to be 22,682. And then June sales is going to be 342,000. And that will be times 15%. That gives us 51,300. Again, we subtract the 2,000 for depreciation. A non-cash expense gives us 49,300. And then we're going to pay 56% of that is 27,608. And so we add that all up, 27,608 plus 22,682 plus 136,416 plus 99,000 gives us cash disbursements of 285,706. All right, so that's part 2 of the problem. Part 3 says show a schedule of budgeted cash collections during May. So let me flip the page here. Actually, all right. Now, so our cash collections, it says that the firm books receivables at gross amounts and collects 60% of billings within the discount period. Sales are on 3/10, net 30. They bill everything on the last day of the month. So our collections for, let's see, they want cash collections during May. So we're going to have March sales. So we'll put May up here at the top. Our March sales will be billed in April. And so 60% of that will be in April, plus 25% of that will be in April. 9% of March sales will be by the end of the second month. So March sales were 354,000, and we collect 9% of that. So that will be 31,000 860. Then we're going to have April's sales, and April will have two parts with discount and April without discount. All right, so our April sales are 363,000. And we're told we collect 60% of that in the discount. Now remember, they bill everything at the end of the month, so this is actually going out in May. Then we collect 60% within the discount period. So we'll multiply the 363,000 times 0.6. That's 217,000, but they get a 3% discount. So we only get to collect 97% of that. So we then multiply that by 0.97. And so within the discount period, we will collect 211,266. Then without the discount is 25%. So once again, we go back to the 363 and we multiply that times 25% and we get 90,750. And that will be our cash collections in May. Remember, anything sold in May is billed at the end of the month. So we won't collect anything sold in May. So we add that all up. 957.50 plus 211, 266 plus 31, 860 gives us 333,876. That is our cash collections in May. All right. And it says determine the gross and net accounts balances of accounts receivable on May 31. Okay, so on May 31, so if we go down to here, the accounts receivable in May 31, that will be what is not collected in April, which will be April sales were 363,000. $363,000 times 15%. Remember, we collected the 60% within the discount, the 25% outside the discount. That leaves us with 15% that we did not collect. And so that will be 54,450. And then we've got all of May's sales that we did not collect. And so the May sales will be 357,000. Okay, add those two together. And we get 411,450 is our gross amount. However, we need to get the net amount. Okay, on the April, 6% of April's sales are going to be considered non-collectible. So we've got 363.06 times. So that'll be 21,780 will be non-collectible from April. In May, we will have 357,000, and 6% will be non-collectible. So that's 21,420. but we also have 357,000 that of that 60% will be in the discount period. That would be 214,000, and they don't pay 3% of that. So 3% of 60% of 357,000 is 6,426. And now we add that all up. 21,780 plus 21,420 plus 6,426 is 49,626. Okay, so if we subtract, this is our net amount, or sorry, our gross amount. If we then subtract the 49,626, that will give us 361,824 as the net accounts receivable. All right, so that concludes exercise 10-32, and we'll move on to the next one.